All right. Hello, everybody. Welcome back to another market close. It is Monday, April 15th, 3:46 p.m. And, well, when I left, markets were down, but they were not down as much as they're down right now. Markets are down. They're down. They got hit. There's no other way to say it. They got schmacked, molly smacked, just like cracked in the head. I mean, I don't know what like simile or analogy to put on this, but markets got hit. They got hit pretty badly, and I quite frankly didn't expect markets to get hit as badly as they did. And primarily the reason for that was because, well, I thought that Israel was not going to retaliate, or at least that's what the news was reporting. Seems like Israel will retaliate. The Times of Israel have reported that Israel will be attacking and or be retaliating back against Iran. And they are hoping that is not going to spark a regional war. But as soon as this news came out, you could kind of see right on the charts, S&P fell 1%, QQQ fell 1.5%, the NASDAQ, and then IWM, small caps, definitely was not good news for them. They fell about 1.39% on the day. It does seem like Israel is getting ready to launch a retaliation. How strong is that retaliation going to be? None of us truly know. Biden did ask Netanyahu last night and in the morning to not do anything. And Netanyahu did not agree. At least that is what is being reported right now. And so that is another reason why markets are down. There's no big macro news that came out to tank markets outside of the fact that maybe on a macro perspective, people have to pay their taxes. And like there's some sell-offs just to fund those taxes. Mark Cuban said he has to pay $288 million in taxes, which is kind of crazy. But here you go. S&P down 1.24%, 504. S&P was at 14 in the morning, right? Like we were right here. Yeah, 514.97. You can see that right there. And then slowly, this big drawdown right here, this was about 12:20. That's when Israel said, hey, we're likely going to attack. And the market basically said, all right, if you're going to attack, then we're going to sell off these stocks. And that is what happened as we got into the close. So let's talk about Tesla. We'll talk more about Iran and Israel, but for those that are just joining, that is the high level for why stocks are down. Palantir under $22, they're down 3%. Tesla, we'll talk about more in a second. 162, they're down 5.26%. Shopify is down 2%. Snowflake down 5%. Apple down 1.7%. The reason Apple's down, I didn't know why in the morning, but their iPhone shipments are down 10% year over year. Samsung is now the world's largest manufacturer of phones. Apple has lost that spot. So Apple, that's probably the reason why Apple's down about 2%. Nvidia, 863. They were down 2%. They were at 900 this morning. They're down. Goldman Sachs still up 2%, even though they crushed on earnings, but they had to sell off a little bit given the broader market is selling off. Robinhood got to 1695 at one point, 1698. Right now it's 1710, down 5%. And Celsius down 7% on the day. I'll give my thoughts on what I think this means in terms of a buy the dip or how the market's going to respond. TLDR, spoiler alert, I think the market's going to buy this dip over the next couple of days, and I don't think this is going to be a dip that keeps dipping unless the Israel-Iran situation gets really bad. If that's the case, none of us can really do that much about it. Bitcoin right here, 63,000. But the broad reason things are down is because Israel is planning to retaliate, and the market is upset about that. It has been a wild, wild day. Okay, let's talk about Tesla. Let's talk about what the hell is going on with Tesla today. Now, the primary reason I think Tesla is down is because, and I can give a little bit more insight now that I got some time to read off on this. It looks like, okay, I don't know if this is true, but it looks like Elon fired 2 senior execs. Now they're saying they left. Their leaving messages sound very fishy to me. It's not the type of leaving message I would expect, but Drew Baglino and Rohan, both pretty senior executives at Tesla. Drew Baglino saying, I made the difficult decision to move on from Tesla after 18 years yesterday. Look at this emoji he puts in the message. He puts it like, who puts a laughing emoji like that in a message where you're leaving? It's just weird, dude. It felt really weird. And then this Rohan dude, the past 8 years at Tesla have been filled with every emotion, but the feeling I have today is utmost gratitude. And then Elon's responses were like, thank you for your service with a period. It wasn't an exclamation point. It wasn't anything exciting. It was just like, thank you for your services. That sounds very corporate way of saying, get the fuck out of here. We're moving on. Why is he moving on from those two people? I don't know. By the way, why are those two people leaving right before you're going to unveil the robotaxi, which to me is perceptually the thing the Tesla bulls have been waiting for years, right? It's what Cathie Wood's $2,000 price target and valuation model is based on, this robotaxi. Why do you leave 4 months before the robotaxi is unveiled? The layoffs today seem to signal that Reuters was not lying. I do not think Reuters was lying. Elon is definitely, or at least it seems, going more to robotaxis versus the M2. We know historically he's never really cared that much about the M2. He cared more about robotaxis. And maybe, just maybe, these senior executives decided to call Elon out and say, hey, we don't like the direction the company's going. And he either fired them or they said, you know what, screw this. This company's going to be a mess for the next 2 years. I'm out of here. That could be the reason. Now, a lot of people are saying, oh, like they're tired. They're burnt out. I don't buy that one bit, dude. You do not get burnt out before you're about to unveil what might be the greatest revolution and essentially achievement when it comes to artificial intelligence. Like ChatGPT is cool. Self-driving cars is way cooler. And the idea that they were going to leave months before the platform, not the actual robotaxi, but the platform that the robotaxi was going to be built on would be unveiled, to me is ridiculous. It makes no sense. It makes absolutely no sense to me. So let's get another update on these layoffs and let me know what you guys think as well in the chat. Here's the guy, Ed Ludlow, who broke the story on Bloomberg earlier this morning talking about it.
Drew Baglino, one of only 4 named executive officers at Tesla. I thought this was a surprise. And what sources told me is that he resigned. He wasn't laid off as part of the 10% cut. What else do you know?
Yeah, I know less than you know, Ed, but I do have to sort of speculate about, the extent to which this may be about, a difference of opinion on the direction of the company. This news comes shortly after reports that the company is, maybe putting aside its work on a cheaper vehicle and focusing efforts on a robotaxi. I think Elon Musk, at first called that report by Reuters false, and then, seemed to sort of lend credence to it by scheduling an introduction of a robotaxi months from now, which, sort of suggests that, he's focused on that. And
dude, it seems like Reuters was right. It seems like Reuters was right.
That raises questions about whether Baglino thought that's the right move, whether Rohan Patel thinks that's the right move. After all, he's going to be the person or would have been the person in Washington who would have to sort of justify that to regulators, and whether or not Tesla is really ready to put that forward is a question after years and years of the company talking about having robotaxis, or at least Musk talking about having robotaxis.
Yes.
When they haven't.
All of this is sort of trying to be a level of prioritization or anxiety that is among investors at the moment. Many would say, okay, cutting down on expenses, on costs is something that is necessary in the context of EV sales more broadly, Craig. What could we therefore be really unnerving the investor base right now when you have SVPs leaving? Is it more the concern about the handing over of power? Ultimately, any sort of fact that Musk currently leads and has done since 2008?
Yeah, I mean, I think it's this concern about, not knowing what the plan is, right? And this is not, just a story that has only surfaced lately. We go back to the Walter Isaacson biography months ago, and one of the more compelling bits within that book was this idea that there was real difference at the top of Tesla as to whether or not they should design this next generation vehicle with or without a steering wheel. And you had within that book, this really compelling section of executives having to kind of talk Musk out of this idea that they could just design the car without a steering wheel and count on the idea that the technology was ready. And I think that's something that we've seen for some time, this idea that Musk has really sort of been out on a limb in terms of how quickly this company will be able to put self-driving cars on the road, and what other executives have said, including engineers that have had to testify in law.
It's not good news, dude. It's not good news. I was speaking to a senior Tesla employee today who said he literally was presenting for Drew Baglino last week. And so it was blindsided to him. He was like, I had no idea this was happening. So this came out of nowhere to him as well. So like for anyone who thinks this was like, yeah, this just happened, this was planned. This happened pretty all of a sudden. Unless Drew and Rohan were getting ready to leave for a while, it seems like the actions over the past few days led them to come to this conclusion, and they decided to get out of here. And either they're leaving a sinking ship. That is one argument people have thrown around. The fact that they were working, and they were literally tweeting about FSD like 3 days ago, right? They were tweeting about regulatory requirements. They are the most vocal Tesla employees on X right now. And so it's very weird. The most vocal senior level executives that work with all the mid-level, junior level analysts and actually respond to people on Twitter are leaving. Like, that's weird, right? No. It's just all of a sudden that happening. It's very, very peculiar. Tesla right here down 5.26% of the day. I still think the stock is holding up pretty damn well. I'm not going to lie. At 162, I mean, most people have said the stock should be at 140 at this point, even if you put a pretty decent multiple on it. The PE is still 37, which you could argue their growth is not going to be anywhere near this year that could justify a 37 PE. So the question now is the bad news baked in going to Q1? And the bad news just got worse today with these two senior execs leaving, or is it going to get worse? Dan Ives today commented on what's going on with Tesla, and he said as well, Tesla is reportedly cutting more than 10% of their global staff of 140,000. That's 14,000 people, including Baglino, which is a gut punch, and key executives. Street wants and needs answers on Tesla's first quarter conference call next Tuesday, as a string of bad news over the last few months has been a horror show for investors. That's basically Dan's clients telling him, hey, Dan, you've held our hand through this negative 35% decline over the past 4 months. But at this point, we're going to tell you to dump this stock and put our money somewhere else, maybe Palantir, who knows, if Elon doesn't get his shit together. Remember, Dan, at the end of the day, is just advising clients. And if he cannot give the right advice to clients, these are what a lot of these tech analysis and Wall Street analysis, if they can't give the right analysis to clients, those clients will lose faith and they'll just dump the stock. They're not going to be that emotional about it. And so usually, and he's talked about this publicly, his job is to be more of a therapist than an analyst when shit goes south, because you're supposed to have such fundamental research on the company that the therapy part should subsidize the people that are losing conviction in the short term. It's always a short-term versus long-term game. And usually, tech stocks tend to play out, if they're good companies, over the long term. The problem is even Dan is getting to the point where it's like, dude, I can't, my clients, like I don't know how much more therapy they're going to pay me for, because at this point, it's just bad news after bad news after bad news. Like Palantir down 3% of the day. We'll talk more about Palantir, but Palantir's getting hit for no other reason than the market's getting hit. I mean, like it's still up 30% year to date. It's going to get hit. I think this dip will get bought out. We'll see how it plays out. Tesla's getting hit because there's a lot of reasons for Tesla to get hit right now, down 5%. And that's some of the pain we're seeing as well. Coinbase also down. Yeah, that's pretty bad. So Bitcoin took a nice little dip when Israel said they're definitely going to be attacking Iran. Coinbase down 10% on the day. Gives you, puts it in perspective why they're down right now. Bitcoin is down. Let's go to the crypto stocks real quick as we get into the market close. We have about 30 seconds. Yeah, there you go. Bitcoin 63, CleanSpark down 1%, Coinbase down 10%, MicroStrategy nasty 10%, Robinhood 1721. Robinhood's down. It's not as down as much as the Coinbases of the world, but they are down 1720. I did buy 25 shares of Robinhood today. So after I know I said I had no money, but I found $430 and I was like, fuck it, we're buying this stupid dip. So we bought the dip. Maybe it'll be a bad dip. Maybe it goes down to 16. We'll see. But I bought the dip on this one at 1717. And so right now here it's at 1719, down 4% of the day. Coinbase is down, Cypher's down, Iran is down, HUD is down. All these companies are down on the day. 4 p.m., April 15th. Thank you everybody for being here. The stock market is now closed. All right, folks, rough day in the markets. That's okay. You got to go through some of the good days to get to, or some of the bad days to get to the good days. And also, I mean, really, we got to remember how privileged we are in this market. I mean, we got a hell of a market this year for the first 90 days. So it's not like, seeing a couple red days probably needed. And honestly, it is what it is. After you run that high, things have to come down a little bit and just chill out, especially around that April, May time every year. Tesla down 5.5%. Alibaba down about 1% on the day. Bitcoin 63,450. I would love to see the inflows and outflows today. That's going to be very interesting to see if people actually bought the dip on these Bitcoin ETFs. SoFi 713 down about 3% of the day. Snapchat down 5% of the day. 1034. DJT did some dilution today. These guys were down 18% on the day. So Trump's back down. Market cap now 3.64 billion. Trump still owns about 1.7 billion in stock in this company that he cannot sell until 6 months from now. Robinhood at 17.19, down 4.34% on the day. CleanSpark down about 1%, 14.69. Google 156. Google held up okay, down about 2%. Mag 7 for the day. Let me know if you bought or sold anything today as well. Put it in the chat. Microsoft 413, Meta 500. Wow, Meta fell 2%. Microsoft fell 2%. Google fell 1.8%. Amazon 1.35. Nvidia 2.5. And then Tesla 5.5. Apple 2.19. So Amazon took the least of the beating today, down about 1.35% of the day, where every other big tech stock was down almost 2%. Semis all were red as well. SMCI down 1.7. AMD down 1.8. Wow, AMD under 160 after hours. Look at that. AMD is under 160. And then NVIDIA right here, 858. I expect the NVIDIA dip to get eaten up, dude. I think people want NVIDIA badly. I think they will be buying the dip, but we'll see how it plays out in a bit. CRM had a dip. I didn't look at Salesforce. Let's look at Salesforce. Wow, Salesforce down. Why is Salesforce down 7.3%? Holy crap. What did Salesforce do to get that's a nasty. Let's go to the SaaS companies. How bad was SaaS today? Intuit down 2%, Zscaler down 4%, CrowdStrike down 3%, Net down 3%, ServiceNow down 4%, Adobe down 0.84%, Mongo down 2%. Yeah, Salesforce took the biggest beating out of all the SaaS stocks. Even Snowflake down 4% of the day. I wonder if there's some specific news to Salesforce. That one is down. Tattooed Investor said they bought Snowflake, Salesforce, and Unity. Oh, CRM got downgraded? Okay, that's why. CRM now is a dividend for those that don't know. So that one does have a dividend. And then Palantir here, down 3.31%. I'll talk more about price action on Palantir and Daily Palantir. It'll be out in a few hours as well. But the big thing to understand is this Israel-Iran conflict is heating up, unfortunately. And that is why I think all stocks took a bit of a beating. Now, people were saying, hey, why isn't Palantir, going up if it's a defense stock that should be helping in these times? And that's because no real contracts have been announced. Right here, Lockheed Martin just got a $17 billion contract. At least that's what I'm seeing reports on, to develop new missiles. Stock's flat. It's down after hours. So if Lockheed Martin, if the $17 billion contract is correct, which I'm still confirming, but that's what the reports look like. If they got a $17 billion is a nice chunk of money. That's almost, 20% of their market cap. If they got a contract like that and they can't move, then Raytheon, Palantir, these guys are not moving at all, even if the perception is that they will be playing a pivotal role in the Israeli conflict right now. So that one is down here today. PayPal also took a nasty beating, unfortunately. PayPal down about 2%, 63. It was doing really well holding 65 last week. Today broke that trend right here at 63.51. 17 billion. Yes, correct. 17 billion. That is I'm going to get some more details on that, but that is what I'm seeing. They got a $17 billion contract to create more missiles from the DoD. Let's get an update from Tom Lee. He was on CNBC earlier today. Let's see his thoughts around the dip, and then we'll keep going from there.
Calls it a moment of dual fragility for equities, but believes the recent dip will likely be bought. And that's certainly playing out today, although off the morning lows. Front Strat's head of research and CNBC contributor Tom Lee joins us. Tom, you've been good about taking things like, say, a job print or CPI and arguing that it's an opportunity if there is a dip. Is it a harder call when it does involve geopolitics?
It's definitely a harder call because the scope of the path this escalation can take place is unknown. But at the same time, we can look at sort of past episodes and past war instances or conflicts and understand how markets react and where positioning is. And I think that's what's giving us some confidence today, that there's a lot less leverage now. And I think the Fed's in a very different position where the Fed could be supportive. And that's why I think, as uncertain as it feels right now, I think this dip will be bought.
Does it create downside risk for your year-end target, let's say?
I think when you move beyond the 1 month, even 3 months, or even 6 month timeframes, I don't think that these actually affect the trajectory because, the drivers of our year-end target are this recovery in corporate profits, the upturn in business confidence measured by ISM, the fact that consumer leverage is still quite low, and that monetary policy is actually supportive of the business cycle. So I think these things all are still at play between now and year end. And, I think our 5,200 target is too low, but I think it's still too early for us to raise our target as well.
Yeah, I mean, I read your note over the weekend, I cited it. A lot of it does rest on this idea that the Fed is in a very different mode. And as you referenced, they're sort of in easing mode. But the story, Tom, has been that they are not going to be able to ease so easily or so quickly. And today's retail sales data only adds fuel to that fire. So I do wonder how much of your thesis depends on the Fed cutting this year.
Sarah, I think it's important for the Fed to be dovish this year. And in terms of how many cuts they do, I know there's going to be a lot of debate about, well, is it 3 cuts or is it 2 or 1? But it's really going to be the reasons why they make fewer cuts. If the economy is resilient and inflation is not accelerating, so they end up doing even as little as 0 cuts, that's actually quite bullish because, one, the Fed still has a lot of firepower to make future cuts, and it just shows you the economy is handling higher rates pretty well. I mean, I think it would speak really well for equities if the Fed made fewer cuts, but for the right reasons.
To the extent, sorry, your thesis depends on obviously earnings coming through. We're at the beginning of earnings season. What are you looking for both now and through the back half of next year in terms of S&P earnings and growth rate?
Well, earnings in the fourth quarter that was reported 3 months ago came in close to 8% above expectations. That's already flowed through into what we expect for 2025. First quarter's already looking pretty good. You know, more than 80% are beating. So I think our 2025 earnings, which is officially 260, and that was 8% earnings growth, is probably low. It's looking like it's going to end up being closer to 270, maybe 275. You know, that's a $15 higher earnings for next year just because of the strength of earnings we're seeing now. So I think profits are coming in pretty well. I mean, inflation's cooling, but companies are still finding operating leverage.
Okay, so we got Palantir earnings, folks. It is officially out May 6th after hours. We have Palantir earnings just announced. So put it on your calendar. This is where we'll be May 6th after hours. What Tom Lee said is kind of the same sentiment I have, that the Fed's probably going to eventually cut and that this dip will get bought. It's just on a red day. It's hard to see that. But, you know, eventually this geopolitical conflict hopefully cools down. And if that's the case, inflation should cool down and eventually the Fed should cut rates. Right here, May 6th, 2024, after hours. Here we go. We are going to be getting Palantir earnings. Going to be exciting to see where that happens 3 weeks from now. That's correct. Robinhood's May 8th, SoFi's April 29th, and then Palantir is May 6th. Now, speaking of Palantir, I asked this question on Twitter. Very curious what people in the chat would say. I got a lot of questions today asking about should you buy the dip on Tesla versus Palantir? I guess because Palantir is finally having like a real dip because it's been above 22 for so long, and today we got to 21. Here's what I said. Which would you buy if you had $100,000 over the next 5 years, Palantir or Tesla? You have to pick one of them. Palantir over the past 5 years up 137%, Tesla 934%. Palantir's market cap $48 billion, Tesla's market cap $507 billion. So far, they're kind of neck and neck. Palantir is taking the lead, 54% versus 48%, 1,800 votes. Let's see how many votes we have over the next 23 hours as the poll is live. I'll put it in the chat for anyone who wants to answer this on Twitter. But really curious what people would say. My answer is unequivocally Palantir. I mean, it's just obvious to me from a market cap perspective, Palantir is going to outperform Tesla in the next 5 years. It has nothing, you know, I know Palantir maybe is an easy answer for people given the weakness that they're seeing in Tesla. It has really nothing to do with that. I think the Tesla bull thesis is intact. I just genuinely think Tesla 5xing or 2xing from here is way harder than Palantir 2xing or 3xing from here. So market cap wise, I think Palantir is the obvious choice, but it's interesting to see how other people are thinking about this given the decline we've seen on Palantir over the past couple weeks and obviously over the past couple months in the context of Tesla. People are saying both. You can't pick both. You got to pick one. This is the one where you got to pick one. You got to like actually decide. This is where we get to know who really loves Elon and who really loves Karp. You got to make the decision. And look, I love me some Elon, but I really love me some Karp. Okay, that's one that I just it's Karp over Elon to me, even though I love Elon. But I'm a little bit more loyal to Karp. It is what it is. PayPal right now, 63.47. Palantir, 21.89. After hours, DJT again down 18% given the dilution they had today. S&P 500 down after hours as well, 504. Where's IWM? Now, here's another piece of macro data that we didn't talk about in the morning. IWM, wow, 195, down 1.44% and down after hours as well. We covered the retail sales data in the morning. That was up 0.7%. month over month, which is really good, right? Because people are spending. If they're spending, then that spending is going to allow the economy to flourish because more companies are able to get money for goods and services. The problem, which I didn't realize this during the morning, usually I pick up on this, but I totally forgot in the morning. It's kind of bearish because if people keep fucking spending, dude, this damn inflation problem, at least the markets were kind of looking at that today. Like, wait a second, why are people still spending? Why do people have so much money? If people really have this much money, then maybe the Fed's not going to be able to cut as soon as we think it's going to be. If people keep spending money keeps going into the economy, it's a lot harder for the Fed to naturally have this Goldilocks utopia zone where inflation comes down. And so those retail sales are good for earnings. They're not the best for inflation. Jay Powell has a hell of a challenge in front of him to keep unemployment low while keeping inflation low as well. And it's just hard for that to happen. So right now, that's the bigger issue we've seen in the context of the retail sales data we had right now. Star Buccaneer says, I love Elon and I'm picking Palantir. Gail says, do the poll on a non-Palantir channel to get actual results. Okay. There's definitely a decent amount of people, I think, that follow on Twitter that care about Tesla as well, right? I don't think, are there more Palantir people that follow me on Twitter than Tesla people? Sure. But still, I do think it's pretty, I mean, the fact that it's an even split right there already shows you that there's a decent amount of people that would pick Tesla. But I still think, it's Palantir. It's Palantir. At the end of the day, it's Palantir. SoFi or Robinhood for the next 10 years? I pick Robinhood. Look, so let me break this down. A lot of people are like, would you pick Robinhood over Palantir? The answer is no. I made a post on this like a month ago. I guess, sometimes you have to make posts again to remind people. Robinhood is a phenomenal trade in the next 2 years, and I think it will be a good long-term investment as long as they keep innovating. Robinhood does not match even 1/1000th of the thesis that I have on Palantir. The reason I like Robinhood so much is because I got the sucker at $8, right? Palantir, you guys got to remember, I didn't get it at $8. I was buying it at $8, but I was also buying it at 25. So the average was not $8. Robinhood, I legit got the fucking bottom. Okay. That's why I like it so much, because I got the bottom. Okay. Usually I'm on the top. I got the bottom this time. So that's why I like it as a trade over the next 2 years, given I think the crypto catalyst and all this stuff are there. But over the next decade, dude, I just don't think there's a single stock in the market that is more exciting than Palantir. I talked about the Hyundai partnership that'll come out later today on Daily Palantir. I talked about that in the morning. Deal after deal after deal, partnership after partnership after partnership. It is becoming quite apparent to me that Palantir is simply the company of the decade. I really do think it's going to be one of the most important software companies in the world. And I don't even think we've seen the level of innovation in terms of a product suite that they're getting ready to build. I mean, the fact that Snowflake CEO leaves, stock cannot recover after 3 months. It goes to show you how little Wall Street respects Snowflake's leadership versus Palantir that has done everything they could do to piss off Wall Street, including doing a DPO. And the stock's up 137% since they went public. I mean, it goes to show you something. It definitely goes to show you something. But I have started to build a hood position. That's why I'm buying Robinhood shares versus options, because I barely had any Robinhood shares, and now I started to buy more because I want to build out that hood position over the long term. I just think deposits are going to go up dramatically given what they announced at the gold event. It's a really simple thesis. So that is also why I'm buying Robinhood as well. Now, in the context of Robinhood versus SoFi, dude, as much as I love SoFi, I just think that Robinhood's more innovative. That's all. I just think they're a little bit more. That's all. SoFi's probably a better business, like on a fundamental basis long term. They're not as attributive to market cycles, right? If the market's down, Robinhood's probably in a tough situation. But I just don't think they've shown the product leadership that they need to show. And maybe they change that on earnings. But for now, it's gonna be Robinhood over SoFi. Granted, SoFi, 712 right now, down 2.86%. I think on earnings, they crushed. The problem is going into earnings, if the macro is not good over the next 3 weeks. So we have earnings probably starting, for a lot of companies in early May, Netflix and ASML this week. If the macro doesn't clear up over the next few weeks, SoFi is going to be reporting in one of the worst macros if this geopolitical crisis gets worse. And I think it's going to be interesting to see if the geopolitical crisis eases up. Maybe that's okay. But if it gets worse, then SoFi, Robinhood, Palantir, all these guys are going to be reporting in a pretty tough earnings, in a pretty tough macro. The benefits of Robinhood and Palantir is they've gone up year to date. SoFi hasn't. So it's going to be interesting to see how that ultimately plays out. Gold is up 1.8%. Let's check that gold prices today. Gold's up Gold's up 1.18% today. Holy crap. Wow. That is all this Iran-Israel stuff. That is all Iran-Israel. So gold has a market cap. What's gold's market cap now? It's above 10 trillion at this point, right? I think it's above 10 trillion by now. let me see, market cap of gold. If it's above, it's yeah, it's 1 point. No, it's 10. Oh, no, it's 15 trillion. Holy crap. Holy crap, dude. Oh boy. Gold is up there. Bitcoin just wants a little bit of that 10 trillion, or a little of 15 trillion, just a little bit of that. That's it. Just a little bit of that. Just a little bit. And again, why is gold up right now? Well, this geopolitical instability is really good for assets that are a hedge, which Bitcoin has proven not to be really that hedge asset. It's been gold. Gold's up 30% over the past 6 months. It's pretty damn incredible to see what's happening with gold. But that is up currently on the day. Let's get an update from Neuberger Berman's Croft on where they expect rate cuts to happen, or how many rate cuts they expect as well. What do you think will happen to miners in 3 days? I don't know. All right, we'll talk about miners after this. But if Bitcoin doesn't get its act together, those miners, they're not going to do well. They are not going to do well. Here we go. We'll talk about Bitcoin miners after this.
The escalating tensions in the Middle East. Our next guest doesn't think the year-to-date rally has been completely derailed, saying we'll see the momentum take a pause as investors focus on these geopolitical risks. Joining us here at Post 9, Holly Newman-Croft, Managing Director for Neuberger Berman Private Wealth, one of Barron's top advisors in the U.S. The market reaction has been confusing.
Yeah, a
What do you
little
make
bit
of it?
confusing. And I think where we see the market now is much more where I would have expected it than where it was at the open with a big rally. I think the data is confusing. And I think what the market is telling us is we really have to take a much more nuanced approach. The easy money's been made. Market was up 26% last year. It's up 8 or 9% year to date, depending on what happens today. But now we just have to sort of peel back the onion and be very thoughtful, not only in construction of client portfolios and their asset allocation, but really down to stock selection and making sure that all the stocks in a client portfolio can weather these very uncertain times. We're starting to see cracks in the system. We certainly saw it over the weekend, and we'll have to see how that all plays out. But we have to be mindful of those cracks as we invest our clients' money.
So when your clients call you this morning or over the weekend and say, Holly, how are we protected, or what kind of exposure do we need if there's an escalation in the Middle East? What do you say?
So we've been constructing client portfolios quite thoughtfully for about the last 18 months. We have been neutral with our equity allocation, but within that allocation, we are really focused on higher quality companies, which you can find in every sub-asset class. But you want companies with low leverage, strong balance sheets, strong management teams, strong pricing power that can withstand rates being higher for longer, inflation. All of these, thinking about what are the cracks in the system this morning, and I was coming up with my list to discuss with you. Higher rates and sticky inflation was number 4 on my list. And I'm like, how can that be number 4 when it's been really controlling the headlines for so long? But we have a lot of other concerns in the market. And you saw that this morning with retail sales, which was strong and certainly beat consensus. But when you look, it's the high income households that are driving that number.
I'm really interested to see what their clients' portfolios would look like, because when you're being neutral on assets and you're not getting into anything too risky, your returns are also not going to be that amazing, right? So, I mean, look, if you're a fund manager and you told your clients we're buying a ton of Tesla for you at the beginning of this year at $200, you're in a tough situation. All right. 160.59. It's not the best. Tesla's down almost another % after hours. Goodness gracious. You kind of messed up for your clients. Now, if you told your clients, hey, we're buying Palantir in the beginning of the year at $16, you did a pretty good job for your clients. But if you stayed neutral and you didn't really buy anything that interesting, I mean, if you're not beating the S&P and the S&P is up 7% year to date, then I don't know why clients are paying you for their money. So I'm always curious, high quality companies that are inflation proof, what companies do those look like that have some risk reward premium attached to them? Because if there's barely any reward premium, then at that point, you're just, you might as well just buy the ETF at that point. So I'm very curious whenever these fund managers come on TV, what do they actually hold? And they're not allowed to talk about the stocks they own. It's okay. Well, it's still interesting to see what their performance would look like. Definitely probably didn't buy any Bitcoin. Let's talk about the Bitcoin miners. So Bitcoin in a tough situation right now. I think the Bitcoin dip's getting eaten up. I think this is a great dip for longs. I think before the halving event, this is probably a little bit of a liquidation you needed to see. A geopolitical instability, that's okay. That's another dip. The ETFs in Hong Kong were approved today. That's estimated to put about $5 billion, Bloomberg reported, into Bitcoin and just in inflows over the next coming months, which is a big deal considering that BlackRock themselves have close to $20 billion assets under management in that Bitcoin ETF. So I think there's every bullish thing you could possibly imagine for Bitcoin happening. The problem is over the weekend, this geopolitical stuff really kind of wrecked its momentum. And then on top of that, you always get a little bit of liquidation before the halving. Now, in the context of the miners, I think the miners, and we talked about it last week, they're in a tough situation until Bitcoin goes up. It's just that simple. Like, people try to complicate it. It's not that complicated. CleanSpark, which is the best out of all the miners, in my opinion, when it comes to Bitcoin. If this Bitcoin thingy, if it doesn't get to 70, 80, 90,000, CleanSpark's revenue or their potential revenue gets cut in half, which means the only way they make up that half is if their margins increase or if their volume increases. And the only way for the volumes to increase is for the prices of Bitcoin to go higher if they can't actually mine that many Bitcoin. So we're going to see how that plays out. But right now, if you're bullish on the miners, you have to be bullish on Bitcoin. You just have to be bullish on Bitcoin at the end of the day. And so I don't think there's that much to that thesis outside of Bitcoin itself. Gallon of Truth says buying more Tesla. Who bought the Tesla dip today? Let me know in the chat. Who bought the Tesla dip? Tesla's about to touch 159.99. Oh boy. Oh boy, oh boy, oh boy. I know that the $330 option for 2026 is was very exciting for people. I know a lot of people on Twitter like that option. That option is about to get a lot cheaper. You know, a lot of people are buying it at $200 now at 160, 330 in 2026. It's very possible, in my opinion, that type of appreciation. But that option itself is probably going to get a bit cheaper now. Someone says people are probably selling for taxes. Yeah, I think most of the selling for taxes probably happened over the past like couple weeks. I guess maybe some more people are selling today for taxes if they filed for an extension. But that also can be another reason why the stock is down or why the market's down in general. When Apple and Facebook laid people off, their stock price went up. Why Tesla go down? Remember in the morning we talked about this. Apple and Facebook, or well, not Apple, but Facebook had a PE of 7 when they laid off people. Tesla has a PE of 40. So it's not the same effect, I think, that Meta had when they were at $90. Real Baby Pluto said, I'm not scared of anything. I bought it. Varun said he sold a 157.50 put. What was the premium? What's the expiration on that? The premiums on these Tesla puts have to be amazing, right? They have to be pretty good today. Out of all days, if today was the day to sell some puts, if you're bullish on Tesla. Let's see, trade Tesla options expiring. Let's go to May 10th. Let's go to May 10th, sell put. 157. Well, 155. Wow. It's giving you $715 a share. That's not bad. It's $715. That's not bad at all. This Friday, you got $1.62. That's not bad either. $162. That's not horrible for 1 week. That's not bad either. Inbound says, I feel like PE isn't the whole story. To me, PE is a big part of the story because, you know, I mean, obviously Meta is a software business. Tesla is a software business, but they're still dealing with like automotive margins. But at the end of the day, Meta was like stupidly cheap. One of my biggest regrets is not buying Meta at $90. I mean, like that was just like the deal of the century. 5x since then. Cut costs, cheap stock at a $200 billion market cap, $120 billion in revenue. You cut costs, reduce the fat, get more efficient, stock goes up. Pretty simple. Tesla's in a different situation. I mean, Tesla stock, people could argue, is still not quote unquote cheap like Meta was. People would say it's cheaper than it was, you know, in the beginning of the year, but it's not Meta at $88. Anthony Noto says, I got Meta at an 89, about SoFi at 4.5. All right, we got the next Bill Ackman in the chat, getting these bottoms. That's great. Not bad at all. Free cash flow is the whole story. Yes, that is also a big part of this story as well. Scott says, I love Elon, but I'm not touching Tesla anytime soon. So when I see comments like that, I understand the sentiment, but I also think that's bullish, right? You want people to feel the fear of buying Tesla in order to think that Tesla is theoretically cheap and that fear is outweighing the greed. You don't want to be buying it when the greed is outweighing the fear. Obviously, if Tesla was running at 190, 200 right now, people would be rushing to the door to buy it, but they're not when it's falling down. That's when real wealth is made, right? When you buy it low and then sell it high. The real question is, is all the bad news baked into Tesla? And I don't think any of us know the answer to that question. I think that's very possible, just given how resilient the stock has been over the past few weeks with all the bad news they've gone through. But I don't know if that's definitely the case. Here's a summary of everything that has happened over Tesla in the past month. Gail says no one wanted to buy Meta at 88. That's also a good point. Literally no one. I mean, even I was scared of buying. And I've loved Meta, dude. Like, I know people think Zucks is evil. I think that argument is just not the best. I've really like admired that company so much. And even I got super scared. I was buying into the whole, they're the next AOL, all that stuff, right? The fear gets everybody. And that's why the people that win really are the ones that took the risk when it's scary to take the risk. So over the past month, worst delivery since 2022, 10% layoffs, 2 major senior execs leaving, FSD miles driven past 1 billion. FSD subscription went from 199 to 99. Street did not care about that today. Elon says robotaxis unveiled on 8/8. 120 price targets thrown by multiple banks. Tesla stock relatively flat. Now that Tesla's 160, it's down a good 2% over the past month versus being flat over the past month. But I mean, look, being down 2% over a month like this, what I'm highlighting on the screen, still not the worst in the world, dude. Still not the worst in the world. K Katana says, do you buy the Tesla dip before earnings? I am not doing that, and I would not do that. If I was managing a fund, I would not do that, because although I think bad news is baked in, I have a bad feeling that Elon's going to get on the call and he once again will not give a shit about what anyone thinks. And you can do that when the stock's going well. But at this point, if Dan Ives is on Twitter basically begging you to like kind of give us some clarity and give a little bit of a shit, and you're still not going to give a shit. And why do I think he's not going to give a shit? Well, he's been tweeting memes all day. I don't think he cares that much anymore. So I think Elon's basically like, buy it or don't buy it. I don't care. I'm doing whatever I want to do. And on the earnings call, he will reflect that sentiment. And I don't think investors will like it. Now, granted, does that mean the stock's going to sell off to like 130, 140? I don't think so. But I also don't think it's the smartest thing to buy it before numbers, because we also know the numbers are going to suck given those Q1 deliveries. Like, there's no way energy's not going to ramp up to the point where it overtakes the or compensates for the lack of deliveries. There's just no way, even if it's growing at like 300%. Like, that's just not going to happen. Energy is not that big of a business yet. So it's gonna be bad. But the question is, how bad would it ultimately become? What else do we have? Elon not caring is the fundamental issue. Well, for some people, right? For other people, like the diehard Tesla bulls, Elon not caring is so Elon tweeting is not the reason why the stock is down. The stock is down for more other fundamental reasons. To a lot of fund managers on Wall Street, like Gary Black, Ross Gerber, et cetera, Dan Ives, they really don't like Elon tweeting. I mean, like, they'll put up with it to an extent. Dan Ives is the biggest one who's been putting up with it. Gary Black reduced his fund by 10%. Ross Gerber basically sold out of all of his Tesla. So they've decided with their dollars, they're not going to put up with it. Dan Ives still has not issued a, major price downgrade. He still has a $300 price target. And we're going to see how Dan Ives thinks about this after earnings as well. Bitcoin right now, 63,000. CleanSpark. Wow. CleanSpark's up 6% after hours. Oh no, never mind. Damn, that was a Weeble glitch. I was like, wow, did the company announce like reverse dilution or something? Like, what's going on? Oh boy. Creating good memes isn't easy. Speaking of memes, I think my meme game has been on point today when it comes to Tesla. I think I had a good meme. So this is what I tweeted today. I mean, all the girls in bed that are afraid of their men cheating. Literally, we are only worried about why Rohan and Drew left Tesla right before the robotaxi launch. That's it. We don't give a shit about any other woman. Like, we literally just care, why the hell are these guys leaving right before one of the biggest products is unveiled for Tesla? That's the reason. And so until we get an answer to that, I think it's going to be definitely hard to sleep a little bit at night. Let's get an update on Apple. Here's one investor that believes that Apple is truly behind on innovation. We talked about the Vision Pro this morning in the context of the Humane AI pin that came out and why wearables in the AI space aren't getting that much momentum. So let's get an update here on what some people are thinking around the world of Apple.
Apple-specific data, or you put emphasis on the market share data coming from the Chinese handset makers and how they had gains in sales. Where does your mind go to first, Fiona?
Yeah, do you know what? I think it's a really good idea to actually look at these two bits of data together.
Dude, she has a heavy British accent. I like it. If you know me, I love that accent. So I'm listening. This is a nice one. This is a heavy accent. I love it.
Because if you've got Apple falling and yet global smartphone shipments elsewhere increasing, I think that makes it an even more dramatically difficult position and picture for Apple. I mean, it really does highlight, I think, the extent of the problems that that Apple is facing, particularly surrounding the iPhone. And I think, I mean, obviously China here is a very big story. There is a lot of competition that Apple is facing in China. But I think there's also another side to this as well. I just feel that Apple is really behind, just as far as innovation is concerned, as far as AI is concerned, and all that's also playing out in the share price, which has really had a tough start to 2024.
2 points.
Every time she says Apple, it's like Apple. It's like she highlights the on the Apple. I like it, dude. I wish I had a British accent. I really like it. I don't know why I like the accent, but I like the accent. That and Australian accents. Those two accents, I like them.
$7 trillion market cap still, but along with Tesla, our two key stories today, these two names in the so-called Magnificent Seven have been anything but magnificent, it feels like, in the last month or so, certainly beginning of this year, Fiona. Can Apple win back yours and other investors' hearts and minds if they are going to be able to show, look, we got AI within the M4 processor, we're going to be able to have it, sometimes they're known to be a little bit slower, but getting it right.
Yeah, that's right. I mean, definitely a little bit slower. They feel like they're very slow to the AI party right now. And that's been sort of, they've been punished by investors. And that, I think, has been part of that sell-off that we've seen. And I think there is a potential for this to turn around. I don't think this is the end of the line at all for Apple. I think, we could see a good turnaround as long as they get that AI product really spot on. I think also sort of, the geographical diversification into India is an area that, again, could be very interesting for Apple as it moves away from China. But at the end of the day, China is a massive market and it's also a very important market. So it's going to be very interesting to see whether Apple can actually turn this around quickly without any support from China.
Fiona, last night, Caroline and I regrouped with the team and we were like,
Apple is not interesting to me right now at all. I think the M4 chip is not exciting, and I don't think the Vision Pro is exciting. The stock rebounded last week, probably from a technical perspective, but it's like $3 away from getting back to the levels it was at over the past 2 weeks. I think it's so funny that Apple and Tesla, two no pun intended, but magnificent companies, have been anything but magnificent. I mean, these companies have sucked all year, and the markets rallied in the face of Apple and Tesla sucking. Apple doesn't have a new product that anyone's interested in. Tesla is dealing with the fact that, look, EV demand, by the way, might be the issue. I mean, I know a lot of people try to avoid that, but I'm seeing study after study saying that Americans, and not even just Americans, but all over the world, people just aren't as excited about EVs as they were before. And sort of the EV hype, and I don't want to say it's just hype because I think the future is still electric, but that hype is starting to die down just a little bit more. And I also don't think what explains the 10% layoffs, right? What explains the 10% layoffs? If EV demand is not the issue, why would you get rid of 14,000 employees? It's not like Tesla was over bloated, right? So when Meta had 80,000 employees, it's a social media app, dude. You don't need that many people, right? So obviously cutting down 20,000 made sense. But there wasn't a demand problem at Meta. People still use their products. In the context of Tesla, I'm really curious, was there fat, on the table when it comes to Tesla? There was just too many people and corporate mid-management, all that stuff. Or do they just not need that many people because they're seeing a little bit of a demand shock? And if that's the case, there's no reason to have that many people there. I don't know. It's weird, dude. And then the two executives leaving as well. I've gotten a ton of messages today saying that that's not normal for two key executives to leave. If anything, they were part of the layoffs and they got fired. That's what it seems like's happening. And here's the theory I have on why they got fired. Again, just my theory. They did not want to go all in on robotaxis. They wanted to go down the M2 $25,000 competitor to the Honda Civic, Toyota Corolla. And Elon said, we're not doing that. We're going down the robotaxi route. And so you got two senior executives that basically are looking at their stock options. They're looking at the company. They're looking at the macro. They're looking at the opportunity cost of their time. If they don't believe anymore in the vision, Maybe because they have some inside information that robotaxis really aren't going to happen anytime soon, like Elon's trying to get the world to think they are, or like Kathy thinks they are. Then this is a dead stock. This is a dead company. We need to get the hell out of here. And Elon's not really respecting our wishes, so we're out. That is one thesis. The more friendlier thesis is that they have other priorities they want to focus on. It's just like whenever a senior executive leaves for other priorities, I always take it with a grain of salt, because if you're at a good gig, you don't leave that easily, dude. You know how many people would kill to be in the position Drew Baglino or Rohan Patel were? It's something you don't leave that easily, especially if you're not super old. I mean, if you're in the prime of your career, late 30s, mid 40s, I don't know. I don't know if that's the time you leave. So it is very weird to see those people get out of there. And that's definitely not looking like it's the best situation right now in the context of Apple. 8.8 was going to be a major push. They're not interested anymore. Yeah, that's the other thing. The robotaxi push. We're not getting a robotaxi on 8.8. We're getting an event to show off the robotaxi. Cybertruck, we got an event in 2019, and then we got the actual Cybertruck 4 years later. So, or 5 years later. So, I mean, like, even if they show off the robotaxi, Elon has got to have a plan to get that thing out soon, because I don't think the market's waiting until 2030 or 2029 for a robotaxi. If the market has to wait that long, could you imagine if Tesla's dead money for the next 5 years, dude? That means they've compounded over the past 5 years. Tesla's compounded 180% every single year when you look at the average. If they stay flat, then over the next 10 years, they will have compounded at 90% year-over-year growth, right? If you just take the 900% they're at over 5 years, over 10 years. But the problem is most people bought in at 400, 415, 380, et cetera, et cetera. Most people did not buy in at those 2019, 2020 valuations before the thing 10x. So I don't think it's going to be flat over the next, 5 years. But if that happens because robotaxi doesn't come out, it would be one of the worst stories in history, I think, for the stock market if Tesla actually doesn't compound. And that would be tough. That would be really tough to reconcile with. Okay, everyone keeps saying robotaxis and $25,000 car are the same car with and without steering wheel. If that's the case, then maybe the M2 production vehicle rumors by Reuters, or that report, was fake. If that's not the case, or if Elon's not as focused on building the $25,000 version of the robotaxi for mass market consumption, because the margin on that is not going to be good. We all know the margin is going to be like maybe 10% on that. Then maybe the Reuters article was true, right? So I think on 8.8 we'll get a lot of clarity. But the problem is, this is what Dan Ives talking about. He's like, well, what is it, right? Like, what's the answer? And it's we're just not getting a lot of clarity. And I think a lot of Tesla investors at this point are getting fed up with it. And that's the issue we're seeing right now. Rivian also below $9 today. Rivian got hit pretty badly. So that's another stock that's down like almost 20% in the past month and a half now. Amit, what do you think about Marquise Brownlee video review take on the AI Pan? I talked about that earlier today on the Market Open. I think he's right. I think the AI Pan is the dumbest product ever. I think the fact that it's cost $700, the only reason you buy it is if you have $700 that you want to burn on fire. And I think it's another Silicon Valley hype startup that's trying to usher in a new era of a paradigmatic way we should think about like technology. And I'm all for that when the technology makes sense. I think this technology does not make any sense. I just really don't think people are going to touch their nipple and be like, what's the weather today? It's like, no, dude, like that's not, I don't see it. I don't see it. Now, granted, I'm also bearish on the Vision Pro. So I'm bearish both directions. I don't see AI wearables becoming a thing, but Marquez pretty much tanked that company today. If that company had a stock, dude, I think that video is at almost 3 million views. You can't have the biggest tech reviewer on the planet say your product is a piece of shit. You just can't do that. I mean, it's just not good. It's not the best marketing. Which is why it's good that Marquez is pretty bullish on Cybertruck and Tesla. He's getting really good reviews on that. And he did an interview with Elon, right? Like these guys have a good relationship, but he's pretty objective when he comes to look at these products. Robinhood, 17.16 after hours. I bought 25 shares at 17.17. So we'll see if that turns out to be a good dip buy over the coming days. Intel was actually up today. Intel bounced after being down over the past 2 weeks. Amazon, 183, Meta 500. Wow, Meta's below 500, 499. And, it's actually nice to see stocks take a little bit of a breather before going into earnings. Netflix as well took a bit of a hit because that means they have some room to run versus running from like all-time highs, right? It's not the easiest to run after you've already run up so much this year. So actually not the worst thing to see some of these stocks take a little bit of a hit. Gila says I can touch my nipple for free. Yeah, see, you can. Yeah, though literally though, you have to put it on top of your chest. And it's just like, it's the weirdest thing ever, dude. And like, even the rabbit, remember the rabbit, that thing that was introduced at CES? They're like, there's no screen, you can talk to it. I'm like, am I like on an island here thinking that this is like, just doesn't make any sense to not have a screen? Like, that's not, like, I like the screen. The screen is nice. I don't know why we're pushing to get rid of the screen. The screen helps. Like, I can see stuff on the screen. I like the screen. But everyone doesn't want the screen, which is very weird. Very, very weird in the context of these AI wearables. Okay, I think that's pretty much what we had to talk about. Oil prices were down a bit more in the day. Oil prices, you see the spike up. This is really annoying right here. So oil prices were down 2% on the day. Now they're barely down. They're basically flat. And the reason for that is as soon as Israel said, hey, we're going to attack Iran, oil's spiked up. So unfortunately, oil is up. It's looking like it's going to be another hot CPI going into April unless this thing cools off anytime soon. And so we might have a rough April and May. But I agree with Tom Lee. I think nothing's stopping the AI train, nothing stopping the earnings momentum. Dip will get bought up, even if it takes some time for the dip to be able to get bought up. Mayor says, I bought some SoFi leaps. Admit, did you get more? I did not get more today. Again, I really don't have any cash. I have 210 leaps that I will be holding into earnings, and we'll see what happens. Hopefully earnings goes well, but if not, we'll get to hold them on. We get to hold them for 2 years because that's why they're leaps. And we'll see how that plays out. Mo Love says, right now it's all about interest rates and geopolitics. As soon as earnings start coming in, the narrative will shift. Smart money always looking for action to play. I agree. I think when Nvidia crushes, it would be hard for me to imagine these companies, Meta, Amazon, etc., crushing and the market selling them off. If anything, maybe they're flat, maybe they get a little bit of boost, but to be sold off on really good earnings doesn't make sense. And from everything I'm looking at, these companies are going to put up amazing earnings. And I mean, Goldman Sachs today, they beat revenue by $1 billion, dude. They beat EPS by $2. Like, market, I don't think expected that, but companies are putting up decent numbers, which is not bad at all. What are leaps? They're basically options, call options that expire 2 years out. And so this is why you get leaps, dude. Because like my Robinhood options, they're obviously significantly lower than they were 2 weeks ago, but they're leaps. So you have time for the thesis to play out, right? You have until 2026 for these guys to really develop into something. That's why I just don't understand the obsession with people buying these weekly and monthly contracts. Like, it's literally buying lottery tickets. Whereas if you have 18 months, you can have a thesis develop. That's the point of giving yourself some time. And usually the options pricing a year or 2 years out is mispriced. So you get to take advantage of mispriced option chains and give yourself time for a thesis to develop versus literally gambling and betting on black that Robinhood will be $19 tomorrow. It's like, or Palantir will be $25 after earnings. Like, you just don't know that stuff. But with leaps, you do have at least some time for that to develop. All right. That's it for me. Thank you, everybody, for being here. Daily Palantir episode will be out in probably an hour, around 6 o'clock. Usually every day we release it. And we'll be at Finance Junkies tonight at 9 p.m. We'll talk about the sell-off today. And then we'll be back for the market open tomorrow. What is your lead position on Robinhood? It is $15, $20 call debit spreads for 2026. And then $22, $25 call debit spreads for 2025. So those are the two positions, and we'll see how they play out. All right, Palantir earnings, May 6th. Got the big news today. I'll see you guys. I will definitely be here May 6th after hours, and it'll be fun. Let's see if Palantir can crush this customer count number and if we can get into the 30s era for Palantir. Thank you, everybody. Appreciate it. I will see you guys tomorrow morning at 8:45. Bye, everyone. Have a good one. Also, I'm going to the gym. Your boy's about to go to the gym right now. It's a beautiful day in New Jersey. It's like 75 degrees, so currently I weigh 170 pounds. This week, the goal is to get to 168. Then after that, 165. Then after that, we're going to the 160s. And then hopefully by end of June, we get closer to that 155-ish, 140-ish, or 145 part of the puts that I have on my weight. So I'll see you guys later. Bye. Have a good one. Good night.